CEO Darius Adamczyk was in just a week or two ago and spoke about this. It's the jewel in the crown of Honeywell to some extent. It's a small piece of Honeywell, but it's doing phenomenally well for them.
It is. So they bought Intelligrated a few years ago for $1.5 billion, which actually is a pretty big expenditure for Honeywell. It doesn't typically do very many large deals. And this is sort of one example of an industrial company venturing into the digital world that's actually really paid off. We've seen obviously plenty of examples where this hasn't worked out. You look at GE and its software effort with Predix, its internal software platform that did not really come to fruition in the way that they had hoped. But Honeywell is seeing double-digit revenue growth at Intelligrated quarter after quarter. Orders were up more than 30% in 2018, and they look really well positioned to sort of benefit from this e-commerce boom.
Now, Adamczyk was very clear that Amazon is not its sole customer here, and that if Amazon were to go away or to, spread out its business among others, that they would do just fine. But really, Amazon is the backbone of this part of Honeywell's business.
No, I don't think that's true at all. I think that actually their customers are very well diverse among the retail world. So among the top 50 U.S. retailers, 30 are customers of Honeywell's Intelligrated business. So I think Darius was right in saying that Amazon is obviously an important customer for them, but certainly not the only one. And I think as you see more and more retailers trying to catch up to Amazon and invest in e-commerce and try to adapt their businesses to sort of meet consumers' expectations of faster and faster delivery, Honeywell should be well positioned to benefit from that.
So who else is a peer at this point of Honeywell when it comes to that kind of business? You would think that others would have cropped up.
So, I mean, it has peers in different parts of the automation world, but I think what Honeywell has been really smart about is really carving out this niche in warehouse automation. And so these companies that it bought were not necessarily, on the scale of Honeywell. Obviously, Intelligrated was a smaller business. They also bought Transnorm last year. That's a German-based warehouse automation company for, roughly $500 million. And so these are small incremental bets on companies that are obviously a lot smaller than Honeywell, but they add up to be something really differentiated for the company.
So how much does it cost Honeywell? What are the margins on this kind of business?
So it's dilutive to Honeywell's overall margin profile, but I think investors are okay with that because when you're seeing double-digit growth and this business is clearly strategically well-positioned in sort of a growing area of the economy, investors are willing to say, okay, we're going to take a few margin lumps for now, and then down the road, once Intelligrated has a significant base of installed equipment, then Honeywell's business transitions more to servicing, and that's obviously a lot more profitable, and so you could see that margin equation sort of swing the other way down the road.
So Amazon is a customer, but Amazon also does a bit of this for itself, right? Why did Amazon need to go to Intelligrated and Honeywell as well? Could Amazon have kept it all in-house?
Well, I think you see this with lots of different businesses. I think obviously companies have a choice to make. Do they want to vertically integrate their supply chains, or do you want to reach out to somebody else? And I think it comes down to a question of expertise and quality. Who has the best product offering? And as a company, what makes the most sense economically for you to invest in?